what we'll do is dovetail a little bit into what Dan was talking about, but I'm going to step back and look at a longer view. And in some respects, hopefully, we'll end up giving you some thoughts from a strategic perspective in terms of what's going on with trade. I'm going to focus on the grain commodities. I have a presentation that looks at the livestock, but you didn't want to vote because you wouldn't get out of here when you want to get out of here. And so we're just going to focus on the grain side at this point in time. In some respects, trade always has been a critical issue with regards to where we are in U.S. agriculture. Certainly, we do export a significant amount of the production that we end up producing. In some respects, due to some of the negotiation stances that essentially the U.S. Trade Representative Office has taken with respect to China. It has been a difficult year without the MFP payments, both in 2018 and 2019. To give you a little bit of an indication in terms of how big those payments were, roughly $38,000 on a $100,000 income. And so for Kansas, essentially, you're looking at 38% of the income, the net farm income the last 2 years was due to the MFP payments. If you look at 2019, there we ended up at about 120,000 net farm income. Roughly 60,000 of that was MFP payments. And so when you're looking at this, essentially the last couple of years, you're looking at 38 and 50% of the income that the Kansas Farm Management Association farms received just from MFP payments. One of the things, and I was at a conference on Monday in Kansas City, and one of the things that people are really concerned about, and certainly you as lenders need to be concerned about, is what is the path forward here in terms of, obviously at some point, and it may come sooner as opposed to later, society isn't going to want to subsidize farmers to the amount that they had the previous 2 years. And so the issue is, in terms of where does declining government program payments, where does that begin to intersect market returns, and those market returns hopefully will come from demand from international markets as they begin to look at trade. And in some respects, I think that's going to be one of the big policy debates after the election in terms of where are we in terms of government support versus market. In some respects, in terms of, does anybody remember what corn was trading for about a month ago or 6 weeks ago? Any ideas? What? 320? Now where are we? So we've seen a big uptick in corn, maybe in the order of 10, 12, 13%. What about beans? I was looking at selling some beans on some land that my wife owns in Nebraska. And I think you were below 8 in terms of the cash market. Now you're into the 9s. And so essentially, we've seen a dramatic uptick in prices over the last month and a half. And in some respects, whether or not that goes on going forward, I think is going to be a big deal in terms of really understanding where we are from a farm income perspective. So what I'm going to do today is essentially look at the soybean, maize is just corn, wheat, sorghum, and then some of the things we're going to look at is the share of global production, the importance of trade in commodities for certain countries in terms of who are the big demanders of U.S. Is it very concentrated or is it very diverse? Certainly that becomes important as you look at that. We're going to spend a little time looking at the importance of China, and then we're going to look at the importers of U.S. commodities. What is the world demand and who are we trading with? Are we in line with world demand, or are we not so much world demand on these different commodities? And then we will finish up with regards to just the mix of global importers. And so looking at this, essentially what we're looking at here is the share of world soybean production. And essentially I have the white, which is the US, yellow is Brazil, blue is Argentina, and the gray is the rest of the world. And so from a concentration of soybean production, is there a lot of concentration in these markets? In terms of essentially 3 countries are producing 80% of the soybeans in the world. You got 3 countries. And so if you're looking at wanting to import soybeans, you can't avoid looking at the US, you can't avoid looking at Brazil, and you can't avoid looking at Argentina, because that's who is producing that. In terms of, you think about this, and I'm not saying that we should consider this as a country, but if you really think about it, think about OPEC. Did OPEC ever have 80% of the share for 3 countries of oil production? And so in some respects, in terms of if the Western Hemisphere really wanted to get together and basically squeeze the world in terms of soybean production, certainly there would be the opportunity, simply because there isn't a lot of opportunity to get soybeans from any place else in the world. If you look at that back in the 1960s, and this goes from 61 all the way through 2018, the most recent data available to do this analysis, in the early 1960s, the US produced 70% of the world's soybeans. In terms of now, we're about 40% of the world's soybeans. And so again, I think it's very important, and as we look at different commodities, you're going to see very differences with regards to that. And so we produce a lot, Brazil produces a lot, Argentina produces a lot. How much of those soybeans do we export? What percentage of the soybeans that we produce in the US, what is the percentage that's exported? Any thoughts? If you look at the white line, essentially we've been over the last few years exporting between 40 and 50% of the soybeans produced. So basically, every bushel of soybeans produced in Kansas, roughly half of that is exported, or 40% of that is exported. If you look at what's going on with regards to Brazil, what's the percentage that they export? They're up at 70%. And so essentially, they have been kind of toying along with the US. They kind of had plateaued between 50 and 60%. And now with what's been going on from a soybean market perspective, they're up over 70% as of the last data. Argentina, in some respects, they're down about 10%. A lot of that is because the way they run their economy, they have a fairly high tax on soybean exports. If you export soybeans as meal or oil, the tax is a lot less, and so what you see Argentina doing with a lot of their soybeans. They end up processing them internally and then exporting them. Why does the government do that? Basically, it employs people. And so essentially by having a higher tax on the raw product as opposed to some of the processed product, essentially by putting that export tax on, it increases or decreases the amount that's raw. There is some talk that that would be changing over time. In terms of looking at this, and you might want to pull this out so your eyes don't have to look at the legend, but essentially what I do here, and I'm going to use black on all the slides with regards to the rest of the world in terms of importing countries. And so what I have here is basically the major importers of soybeans in the world, and we see that big red aspect there, and that is China. In terms of looking at this, China is a major importer of soybeans in the world, and in some respects, that's where the negotiations are so important with regards to China. In terms of, if you look at that, essentially overall, in terms of volume, and this is million metric tons exported, overall, are we exporting, is there more trade going on or less trade going on in the world? a lot more. Simply at the beginning of 2000, we were down at about 40 million metric tons trading. Now we're up at about 150. And so basically, in terms of over a 20-year period, essentially we've increased the trade in soybeans by about 100 million metric tons. And so again, there's a lot of volume of soybeans moving around. A lot of it is ending up in China. In terms of looking at this, essentially, if you look at the line, 60 to about 150, essentially China's importing about 90 million metric tons. In terms of thinking back to this before I go to the next slide, is there any way that China can get all of their soybeans without coming to the US? There isn't, and we'll show that in the next graph. But in some respects, by picking on the soybean trade, certainly that has caused a lot of consternation in the US. But if you look at it from the China perspective, they know that they're kind of hung out to dry, that they can't meet their soybean demand without coming to the US. And so in some respects, we always look at it from our perspective, and certainly there's a negative there, but in terms of if you're going to pick a fight from the US perspective, soybeans is the commodity to pick that fight with China, simply because they have gotten themselves in a situation where essentially they can't get their soybeans and completely ignore the market. In terms of looking at this, and essentially in 2018, essentially China basically took 3/5 of the world's soybeans that were traded, 60%. Number 2 is Argentina at 4%. And so again, when you have market shares so divergent in terms of, that's certainly from a soybean perspective why we're there. Mexico 3%, Netherlands 3%, and Germany about 2.4%. The top 5 countries basically import 71% of the soybeans, the top 10, 81%. And so very concentrated on the producer side, the supply side, but very concentrated on the demand side. And the big concentration on the demand side is one country, China. In terms of looking at it, this basically looks at it from the exports of the US, Brazil, and Argentina. Those are the white, the yellow, and the blue, and so you're going to see those colors in the slides as we go forward, and you see the red. Certainly you can see that as the beginning of the tariffs and the trade wars with regards to China, China did back off a little bit on soybean imports. They backed off from about 95 million metric tons to about 880 or 88 million metric tons. And so, but again, in terms of, if you look at those numbers in terms of with the trade, essentially Brazil's the major competitor, and essentially they're up 125 minus in terms of about 45. They can get about 80. And so in some respects, there's not, if they took 100% of Brazil's crop, they still wouldn't be able to meet their need. If they could also take Argentina's crop that they have to export, they still couldn't meet their needs. And so, again, it does show the concentrated nature. In terms of, can China produce their own soybeans? Instead of importing, could they say, okay, you're the Chinese farmer, just grow more soybeans? In terms of looking at this, the way that you interpret this is the slide along the y-axis basically is their soybean imports as a percent of production. They're basically importing 700% of their production. How easy would it be for the US to essentially increase soybean production by 7 times in a short framework? And so again, you can kind of see from a production perspective, China's kind of boxed in terms of essentially they're basically importing 7 times what they end up producing. And so in order to ramp up that production, it would be a major shift with regards to what they're doing from their land mass. And then the last thing in terms of thinking through this is the percent over time of Chinese imports from the US, Brazil, and Argentina. And the top there that doesn't meet 100% is the rest of the world in terms of where they're getting their soybeans. And so essentially they're getting 90% of their soybeans from the US and Brazil, a little bit from Argentina, and a little bit from the rest of the world. And so again, if you look at the soybean perspective there, you can kind of see basically from 2017 to 2018 in terms of just the explosion there in terms of the yellow area. And so certainly they went out and tried to get most of the soybeans from Brazil. You ended up seeing the white line ended up dropping a little bit as we look at that. In terms of market share, essentially Brazil exports 55% of the world's soybeans, the US 30.4%. If you would go back 2 years, it was basically the US and Brazil about 35% each. And so you have seen a big switch there. Paraguay is 4%, Canada is 4%, Argentina is 3%. You take those 5 countries and they export 95% of the world's soybeans. All of those countries are Western Hemisphere countries. And so again, looking at that, that is the dependence that they have on the Western Hemisphere. And if you look at the top 10 exporting countries, you essentially got 99%. The concentration ratio in soybeans is just incredible. And then the last slide here is where are the US soybean exports going? Essentially, you saw that at one point China was up about 50 to 55% of US exports. So that's where most of our soybean destination is. In 2018, it was about 20%. And so essentially 20% of the US exports were going into China. The rest of the world basically is beginning to take up what China hasn't bought in terms of essentially the rest of the world. That block in yellow basically went from roughly about 10% to about 20 to 25%. And so in some respects, we're seeing less concentration in terms of where the US soybeans were going. But big demanders are Japan, a little bit less, Mexico, the EU actually takes a lot of the soybeans, and then also Asia. So to summarize soybeans, essentially soybean production is dominated by 3 countries, the US, Brazil, and Argentina, roughly 80% of the production. 40% of the US and 70% of the Brazilian crop are exported. Over 90% of China's imports are from these 3 countries. Soybean imports dominated by China. They basically take nearly 60% of all world's imports, and the top 10 countries basically import about 81%. The US is heavily dependent with regards to China for exports. I think one of the things to realize is that this phase 1 of the China-US negotiations is going to be pretty important. In terms of essentially based on, from an agricultural perspective, and I had a chance to listen to the U.S. Trade Representative's Agricultural Ambassador, Greg Dowd, and he said that basically what they're seeing is that they are kind of essentially ramping up and taking U.S. agricultural products about what is expected in that agreement. He said in the trade agreement, there were 57 things that basically had to be resolved between the U.S. and China, and basically 50% or 50 of those have been resolved. There's about 7 remaining issues that they have. And so he's pretty optimistic with regards to the fact that at least through the first 2 years of this agreement, that there is some possibility that they will look there. Next, we'll go to maize production. In terms of maize production, again, same type of graphs. One of the things you'll realize is there's a lot more corn production around the world. In terms of the US, Brazil, and Argentina basically make up about 50%, with the US making up about 40% of the world's corn production. And so again, in some respects, unlike soybeans where there's a major competitor with Brazil, we don't have that major competitor on the corn market. And so there's a little bit difference there with regards to the soybean market and the corn market. And the other big difference is that while we're exporting 40% of our soybeans, we're only exporting roughly or less than 20% of our corn. And so we're using about 80, 81, 82% of the corn domestically. And again, that makes it a lot different in terms of the importance of trade when you're essentially using 80% versus 60%. If you look at Brazil, they export about 30% of their corn. Argentina basically is about 50 to 60% of the corn. How is a lot of the corn produced in Brazil? Is it the main crop or is it the secondary crop? It's a secondary crop. And so when you think about this in terms of in the US and Kansas, when we do a secondary crop, which is soybeans, in terms of, do you expect to get the same level of production that you would on the first crop or the primary crop of soybeans? It's one of those things that you put in, hopefully you get a contribution margin there and it ends up producing. Same thing with Brazil. Soybeans is a major crop. Once they harvest soybeans, they come in and their winter crop is actually corn. And essentially that follows the production. In terms of, certainly they care for it a little bit, but they're not going to dump on all the fertilizer and stuff like that until it looks with regards to rain. And also in terms of just how that crop is developing. The other thing I think that's important to realize about corn production there is that their yield per acre is a lot less than the yield per acre here. But again, it's not unexpected given that it's a secondary crop as opposed to a primary crop. While soybean yields are pretty comparable, the corn are not. In terms of maize, importing countries, I still have China there in the red. In terms of if the US was going to fight with China, is the corn market one that you want to fight about? Essentially, no, because they don't import that much of their corn. In terms of looking at this, you can kind of see the countries there, but really in terms of looking at this, couple things in terms of, again, trade is becoming more important. We're trading more metric tons and quite a bit, again, in terms of, you look at it from about 2000, it was right at 80. Now we're up above 160, and so essentially since the turn of the century, we've doubled the tonnage of corn that's floating on boats around the world from economy to economy. Certainly a couple of big places to be concerned about is Japan, in terms of they certainly have a big import of corn. In terms of another one is Egypt, and another one is Taiwan. So a lot of corn demand over in Asia. To look at this again, one of the things you end up seeing is there's not a lot of dispersion between these. In terms of, for soybeans, we had China at 60, and then the next one was 4. But here we have Mexico taking 10% of the imports, Japan 9%, Vietnam 6%, South Korea 6%, Spain 5.6%. In terms of recent trade agreements, what are some of the recent trade agreements that were enacted by the current administration over the last couple of years? USMCA, so that was one agreement. From a corn perspective, is that a good thing? Yeah, Mexico's the big #1 importer, and so it's probably good to be having trading agreements with your #1 import. What's another one that they negotiated? Japan. They're #2. Was that good for the corn farmer? Relatively, probably yes. And then a third one that they have worked on, Korea. And so essentially the three big agreements that they ended up coming up with over the last few years was basically USMCA, Japan, and South Korea. And so certainly if you're a corn producer, you're probably pretty happy with regards to what's been going on with trade negotiations. In terms of looking again at the exports, and so I have US, Brazil, and Argentina exports there. You can see that basically the US is the major player. In terms of there, you have the Chinese imports, and you can see that relatively China could get their corn from a lot of different places. Simply, they don't import that much corn. And essentially, China has been an importer and an exporter. In terms of, again, you have the percentage along there. Essentially, at one point, China exported 14% of the corn. And so if you look at the high point there in the early 2000s, right now they're importing corn. And so essentially, they're importing less than 2% of their production. And so from that perspective, they're pretty self-sufficient on corn. And they actually have, as recently as 15 years ago, been a corn exporter, as opposed to the importer. In terms of looking at the exporting, U.S. by far is dominant. In terms of 40% of the corn that goes is from the U.S. 13% from Brazil, 13% from Argentina. Ukraine, Dan was talking about the fact that Ukraine is becoming more important, up there at 12%, and then after that it drops down to France. And so essentially the corn market has a big player, the US, and then it has three intermediate players in terms of Brazil, Argentina, and Ukraine, and then it drops down from there. 82%, the number was over 90% for soybeans, 92% for top 10, that was 99%. And so the corn market is less concentrated than that. The trading volumes are somewhat the same. And then in terms of looking at this, in terms of some of the big importers of US corn are Japan, Mexico. Mexico is number one. Japan is number two. Korea is pretty big in there. A lot of our corn goes to Central America, and so Central America is pretty important with regards to the corn market. Again, we produce more than a third of the world's corn crop, but less than 20% of that is exported. And so we have a lot more in terms of domestic demand. Major importers are Japan, Mexico, Vietnam, South Korea. Essentially, the top 10 countries on the import side is roughly 57%. And we're pretty heavily dependent on Japan, Mexico, and Korea on our imports. And so again, from some of the trade agreements that have been done, certainly that is there. The next, we'll get into the wheat state. In terms of from the wheat state, is the U.S. an important player in wheat? And it's kind of hard to say because we are in the wheat state here. In terms of, that's kind of our motto, but in terms of looking at this, essentially we're down about 10% of the world's production of wheat. And so from a production of wheat, it's very much dispersed globally. In terms of the export percentage, again, you're looking at between 40 and 60% of U.S. wheat is exported. Brazil, in some respects, doesn't produce a lot, doesn't export a lot of wheat. And then Argentina actually exports about 60% of their wheat. And so again, from a domestic production perspective, about for every 2 bushels that we produce, we export 1. And so again, the export market is very important to the wheat farmer and the Kansas wheat farmer. In terms of looking at this, and one of the things that's interesting to look at is if you add up if you look at the world wheat trade, if you look at the world corn trade, and you look at the world soybean trade, the volume is about the same. They're all up there in this 160 or 160, 180 million metric tons. There's actually more wheat trade than there is corn or soybeans. But there's not a big distinguishment between those. We're up at about 180, 160. In terms of looking at this, you can see very much that the rest of the world exports a lot of wheat. That's up at 100 million metric tons. None of the other crops are anywhere close to that. If you look at this in terms of importing countries, is there a major importer, a dominant importer on the wheat side? Not so much in terms of 5.6 on Indonesia, 5.2 on Egypt, Algeria 4.6, Italy 4.2, Brazil 3.8. And so if you look on the wheat importing side, there just isn't that major demander of wheat imports. Again, if you look at the market share of the top importing countries, 23.3%, and top 10 is 39%. And so very dispersed market. And so in some respects, it's much harder to move a lot of wheat without negotiating with a lot of countries. Where corn and soybeans, it's much easier to move big volumes by a few negotiations. Wheat is a much more dispersed market. In terms of looking at this, in terms of U.S. wheat exports and Chinese imports, again, the number goes up to 140, 160, 180 there, and we're down between these three countries of about 25 million metric tons for the U.S. And then you can also take a look at China's demand there. In terms of, again, wheat, China is fairly self-sufficient on wheat in terms of their importing less than 5% of their production. And so, again, wheat's probably not a big commodity to pick a trade or a fight with if you're going to try to negotiate. Exporting countries, and this has changed dramatically. And this is probably one of the big things in terms of I actually do a class with an individual from Moscow, and if you talk to him, and he said that, you know, I never would have imagined that Russia would have been a player in the wheat export market. In terms of what led to the big boom in 1973, 1974, in terms of the U.S. farm economy. Who was the major purchaser of wheat? Russia. And so essentially they were the point where they came in, started importing U.S. wheat, drove the price up, and now what are they? They're the #1 exporter in the world. And so again, if you think about this, in a half century, essentially Russia went from a major importer to a major exporter. And again, it just shows in terms of how technology can change and how these patterns can be competitive. In terms of Canada, basically in 2018, was second in exports. The US was actually third, and then France and Ukraine. And so certainly that Black Sea region that a lot of times Dan talks about when he's doing the outlook on the wheat market, basically it's Russia and Ukraine that basically essentially are looking at 8.6 and 23. So about a third of the world's wheat that is exported comes from that Black Sea region. And so again, what's going on in Russia is a big deal to US wheat producers. In terms of looking at these, you can see that, again, China isn't so important with regards to wheat exports. In terms of our wheat, tends to go to Japan in the green. And then it tends to go to the Philippines in the darker green. And then essentially the red there is Mexico, and then certainly other Central America. And so again, if you add up the red and the light blue there, you can again see how much Central America is really important in terms of where we send our wheat. Roughly, if you'd add that up, probably about a quarter of our wheat ends up going south into Mexico, and then the rest of Central America. Again, we produce roughly 10% of the world's wheat crop. Roughly 40% is exported. Wheat imports had historically been more important for China, less so now. Major importers of wheat worldwide are Indonesia, Egypt, Algeria, Italy, and Spain. And if you look at who we're importing or exporting to, it's Japan, Mexico, and the Philippines. And so we certainly have some market development potentials there with regards to Indonesia, Egypt, Algeria, Italy, and Spain, which are the major importers of wheat in the world, but we're exporting to a different set of clienteles. And so certainly market development in different countries, I think, could be very important to the Kansas wheat farmer. The last thing we'll look at is sorghum. In terms of sorghum, in some respects, a lot of sorghum is produced elsewhere. In terms of looking at this, roughly 20% is produced in the US, Brazil, Argentina, about 80% is produced in the rest of the world. You can see that US is the dominant sorghum producer in the Western Hemisphere. In terms of what we're exporting, we've been exporting anywhere from 40 to 60% of the sorghum produced. And so every bushel of sorghum produced in Kansas, half of it goes abroad. In terms of, if you look at Argentina, they're down less than 20%. Brazil doesn't produce much, and it doesn't export much. One of the things here, in terms of the importing countries, couple things going on. Is there a big trend in terms of sorghum imports? In terms of, if we would go back into the 1970s, it was about 14, and if we went back to 2017, it was about 13. And so you don't see the big growth in world sorghum trade that you do in wheat, corn, and sorghum. There isn't the increased growth in metric tons. In terms of looking at this, the total is 14. Remember what the numbers were on the others, 160, 170, 180 up there. And so it gives you the scope of the market very much in terms of maybe 10% of what it is for corn, soybeans, and wheat. The other thing is the countries that import, is it pretty constant or is it pretty jumping around? Pretty much jumping around in terms of looking at this. In terms of the green, essentially Colombia or Japan was a big importer, kind of in the 70s. The big thing that's come up recently is essentially China. China has become a big importer of U.S. sorghum and sorghum of the world. Again, looking at this, China imports 55% of the world's sorghum. 10% in Spain, 9% in Japan, 3% in Mexico, and then 3% in the South Sudan. Top importing countries, 79%, that's all China. Top 10, essentially 89%. To give you an indication there, essentially China could get all their soybean imports from the US. In terms of, you can end up seeing that they're very close to their imports or what the U.S. is producing. To give you a little bit of an indication with regards to the trade or imports as a percentage of production, essentially from 1961 through 2012, it was about 0. And then essentially it's up to the most where they imported 4 times what they produced. And so again, sorghum is becoming a bigger deal in terms of Chinese imports. Exporting countries, the US is the major market there, 73%. Australia, 8%. Argentina, 4.4%. France, 3%. And Kenya, 2%. Top 5 exporting countries, 90%. Top 10 is 98%. So sorghum is much more concentrated like the soybean market. And again, exports, where we export at one time, it was all Mexico. And now it's all China. And so essentially we've displaced all of the imports or exports to Mexico with exports to China. And so just some numbers, roughly 45 to 55% of US production is exported. We produce roughly 20% of the world's sorghum crop. Sorghum imports are currently very important in China. Major importers in the world are China, Spain, Japan. High market contracts or contacts there. In terms of heavily dependent on China, US is a major exporter in the world, basically with 73% of the exports. And so to summarize, basically, the soybean market, the global trade market is very concentrated. Big competition with Brazil. Argentina also dominates with regards to production. Basically, China is very concentrated in the demand. And so if you're going to produce soybeans, you're going to have to get along with China in terms of simply because they are the major importer. Conversely, is if China is going to import, they're going to have to get along with the US, Brazil, and Argentina. And so in some respects, it's a very high market power there where you have two big major dominant players on each side of the market that essentially, if you take economics, this is going to be a game theory type solution as opposed to a competitive market solution. Maize, U.S. is dominated in production, but exports are less important. It's really 20% of our crop. USMCA and Japan, those negotiations were very important for the U.S. corn producer. And then wheat, very dispersed. We export nearly 40% of what we produce in the U.S. It's very dispersed. No country imports more than 5% of the world's total imports. Again, USMCA and Japan were pretty important for the wheat market. Sorghum, very concentrated in production. U.S. exports more than 30% of the crop. And export demand is very variable with China dominating. And so with that, we'll open it up for questions, discussion. Any surprises here? Yes?
How much the demand for soybeans in China, how much of that is based on consumer taste and those requirements there? Is that a great difference there? Is it just pure population or no production domestically or what?
The question is a good question in terms of it's basically asking in terms of how much is dependent on Chinese tastes and preferences, how much is on their production capacity. There's a couple answers to that, and I'll look at it both from the demand and the supply. Essentially, one of the things that the Chinese economy is trying to manage is population. And if you don't have a service economy or your service economy isn't developed, you want a lot of rural migration into the cities very quickly. You really don't. And so because of that, they end up limiting the technology that can be used. And a lot of their crops are hand harvested, and they're in a multi-cropping type system where you have it interspersed with permanent plantings, for example, trees and those type of things. If you're a citizen of China, would you prefer to harvest corn by hand or soybeans by hand? I don't know if you picked or husked, but it's a whole lot easier to pick corn by hand as opposed to back-breaking, cutting the soybeans and doing that by hand. And so from a labor perspective, one of the things they're very concerned about is managing the technology coming into the country with regards to production, and simply because of that migration issue. The other thing is, what is the major protein that Chinese consumers consume? It's pork. And one of the things, in some respects, this is a big issue that's going to go forward with regards to soybean demand, simply because pigs in the U.S. diet eat a lot of soybeans. They eat a lot of corn, but they also eat a lot of soybeans. In terms of one of the things that has happened that will be a big deal going forward is essentially, at one point, a lot of Chinese pork production was fed based on food scraps. But essentially, for all kinds of disease issues, they essentially have said no more. In terms of now, they have to be fed in a more technologically safe manner than just feeding them food scraps. Because of that, what is that going to do? And part of that is some of the disease issues they've been having in China with regards to their diets and how those things are out, but they're going more to a US or world-based production system. And so because of that, they like pork in terms of that's their major meat that's going to be in their diet. And all of a sudden, they're going to restrict the diets with the way that pork is produced in order to deal with some of the disease issues that they've had. If you're the Chinese government, do you really want to limit the amount of pork that's available to the consumer? Or would that be viewed by the consumer as a step backwards if all of a sudden we can't have the pork in our diet that we've begun to get accustomed to, and now we have to go to an all vegetable-based diet? Again, there's a strong demand for that meat protein, and it's becoming larger in the fish and the beef, but the pork is the big dominant feature there. And so in some respects, they're going to figure out a way to get pork. And I don't know if you've followed anything, but Germany now has African swine flu issues. And so that used to be a big supporter of pork. And so that's kind of a relatively good thing for the US pork farmer in terms of simply because that takes out one of the major exporters on pork that China used to import. And so you look at pork, you look at the fact that they're changing the diet of pork production. In some respects, that is going to exacerbate the issues with regards to soybeans. And so both from a supply and a demand perspective, I think it's going to look pretty good long-term for soybeans. And in some respects, that's kind of why I'm kind of optimistic that they are going to have to realize that either we're going to have to force our consumers to change diets, which is not a good thing probably to try to do top-down. Certainly organically, and as Chinese choose to change your diet, that's fine. But usually that's not going to be a good thing if you had a diet that you were happy with and you have to retreat in terms of your diet. For example, how many of you want to go back to your college days diet? In terms of probably none of you. And so in some respects, maybe that would be what we'd be looking at, is taking the diet you have now and kind of saying, okay, you're back to your college days and that's what you're going to eat. You wouldn't be happy in terms of, maybe you would, I don't know, but most of us probably wouldn't be. And so from that perspective, I'm pretty optimistic that they're going to have to work something out in terms of it's not all of the US. We don't have all the risk on this. China has a lot of risk too in terms of seeing these negotiations through, simply because they can't get their soybeans to feed the pork, to feed their people without dealing with the US. Yeah, Kyle.
About 10 years ago, there was talk of Japan doing major agricultural development in Eastern Africa, a lot like the Japanese had done in South America in the 70s. I haven't read anything about that in a long time. Is that still happening?
In terms of Africa, certainly is a big potential agricultural production area. The big thing that they're fighting is they're fighting infrastructure, and they're also fighting a lot of the land reform issues that they're going to have to deal with in terms of certainly they have very small smallholder holdings. And in order to get the production to be on the scale, to be competitive from a global market, there's got to be a lot of institutional change, infrastructure change in terms of moving the product. One of the things I think that's important to realize is by roughly 2050, there'll be 2 billion more people on this planet. And of those, 1 billion will be in Asia, 1 billion will be in Africa. And so Africa is going to have to figure out some way to feed those people, and they're actually starting from behind. If you look at malnutrition maps and everything like that, those are, Africa is very problematic in terms of being able to feed their people. There is a lot of interest in agricultural development. One of the things that is going on there is China is very interested in that. But there's a lot of cultural conflict between the Chinese and the Africans. in terms of, in some respects, there's just a lot of reticence in terms of, are they just in here to mine our agricultural resources and put it all back to China and not develop us? And Africa certainly has had that over their history in terms of where people would go into Africa, mine their resources, whether or not it's their human capital, whether or not it's their minerals and other precious metals. And so it's like, you know, this has happened. We've seen this story, and so we're not so sure we want it to happen again. And so there's a lot of back and forth with regards to Africa. There is that development going in. There is infrastructure going in terms of, I've done some work in Uganda. And when I started going there probably 5 years ago, the road to the airport to a major city, Kampala, probably about 50 miles, probably about a 4-hour trip. Two-lane road basically there, but the Chinese basically over the last 4 years have put in a toll road. And so essentially once you get out of Kampala and on that toll road, it's about a 20-minute drive to the airport, maybe a little bit more, but essentially that infrastructure is really going to be key in terms of, I think you're going to see a lot of that around the cities first. But it'll be really interesting to see how that infrastructure develops in the more rural areas where production of agricultural products is occurring. So a lot of interest in development. It's going to be a slow go, but Africa will be part of the solution to feeding the world's population. If you look at rainfall patterns, there's a subset of Africa that has great water and great soil. And so there are the opportunities there. The big thing is how quickly you're going to get the political stability and you're going to get the infrastructure necessary to support agriculture. In terms of the railroads and the water investment that the U.S. made lots and lots of years ago is still the envy of the world. In terms of Brazil's trying to catch up, Africa basically would love to have that type of infrastructure to move agricultural commodities from where they're produced to the rest of the world on a cheap basis, relatively cheap basis. The story I like to tell in Brazil is how many of you would like to have to take your commodity from North Dakota to New Orleans on a 2-lane road and part of it's dirt. And that's kind of what they're doing with parts of the soybean production in Brazil. And so that's actually constraining Brazil. And one of the things that's going on in Brazil now is, and I have a MAB thesis student that's finishing her thesis, but she's looking at having her company do a corn ethanol plant in the middle of Brazil. And so there's a lot of corn ethanol plants going into Brazil, which will eventually affect the ethanol trade. Other questions?
I don't have anything
Okay.
here.
So you said Ukraine's rising their corn production. Why are they choosing corn? Why is that not soybean?
That's a good question. I don't know. Dan, do you have thoughts in terms of why is Ukraine doing corn and wheat as opposed to soybeans?
I have to look into it more. I would wonder about the, they're supposedly, I understand they're like North Dakota, in terms of where they're at thematically. So I guess first question I would ask would be, whether it's comparative advantage. Economic. After that, I don't know. What I've wondered about is that when Ukraine can grow corn and feed livestock, well, when China had all their production problems with the livestock, well, one off-site place that they go and grow feed hogs at would be Ukraine.
Yeah.
But I don't know if that's developed.
That's a good question, because climatically, I think they should be able to do it. And actually, The big thing though is fertilizer is going to be relatively cheap in Ukraine simply because there's a lot of it produced in Russia. And so it might be just the fact that they can get relatively cheap fertilizer on the corn. And so that's a good question. I'll have to look at that one in terms, I hadn't thought of that, corn, soybeans, but certainly that could be an emerging market for soybeans, because climatically, I think they should be okay, but certainly corn and soybeans from a growing season, we've expanded soybeans way up into the Dakotas just as we have corn, and so I think they could do it from a climate perspective, but that's interesting, and that'll be something I think we'll need to keep track on, and I can get you some statistics on that, or if you go to FAO Stat, that's a website that essentially has all this world crop production, and so you could look at the relative yield on corn versus soybeans, and then you could look at the production for Ukraine, and so, but if you're not familiar with FAO Stat, you're interested in this trade and production stuff, it's a good website. Again, people will argue whether or not it's 100% accurate or not, but it's as good as there is in terms of getting data. And from the US perspective, it matches up pretty much with the US data. I've had other faculty in other countries kind of say, okay, does this kind of represent which your governments are producing or what the US is saying you're doing? And they said it does match up fairly well. It's not perfect, but if you show me a perfect data set, it'll be the first one I've seen. Anything else? Again, thanks for your attendance. This is part of the first large meeting we've had face-to-face. And so as Rich indicates, certainly we do want your feedback in terms of, we've been doing a lot of surveying of our clientele, trying to figure out, okay, where is the comfort level in terms of face-to-face versus online? Obviously, your comfort level with face-to-face is high. And so since you are here face-to-face, but kind of continue to inform us in terms of, I think we have a preference for face-to-face when we can. Certainly, I think the world as we see going forward is going to have both face-to-face and online in that, but we do kind of want to get your thoughts in terms of the food service, all that kind of stuff in terms of, was it okay? Was it obnoxious? Was it better than you expected? That feedback is really important as we gear up our extension programming in the fall. And so the other thing is we have put a lot of information on agmanager.info. And so we do want you to make use of that. And then probably the other thing we've expanded here quite a bit is our YouTube channel. And so if you search YouTube and then agmanager.info, a lot of the presentations we're doing now are on that YouTube channel. And so there's obviously the ability to kind of learn as you go. I think Dan pretty much does a weekly update or a bi-monthly update on the commodity prices there. Glenn has done some livestock stuff, and there's other stuff that's on that channel. And so if you have an interest in terms of looking or trying to find information there, it's certainly there. But again, thanks for your attendance. We'll turn it back to Rich, and he will finish us out.